Hey there guys, another update on portfolio performance over the past week. Looking over the past week, which has been relatively risk on, we've seen portfolio returns range from portfolio 1 returning 0.64% to portfolio number 4 returning 1.71%. I think it's been quite a volatile week in terms of Chinese equity markets, with multiple updates on this over the past couple of months. And this week, the surprise was in the positive, and you'd see Columbia Threadneedle returning 14.75%, and HSBC MSCI China up 13.3%. That's on the back of some encouraging signs continuing to come in terms of loosening that zero COVID tolerance curb policy and the rolling lockdowns associated. And we've just seen, as of Wednesday morning, an update coming out of Beijing with 10 additional measures giving local municipalities sort of some autocracy over how they're going to roll out their lockdowns in the event of positive COVID tests, and also giving Chinese people the ability for those who test positive to quarantine at home. Alongside that, we also saw some relaxation in terms of the requirement for a negative COVID test for you to use public venues and also to use public transport, which is beginning to be seen as more positives in the grander China reopening story. But then again, heading into colder China through the winter months towards the end of the year, that'll be the real litmus test on the sort of stance on containment and management of the pandemic. Looking in terms of detractors from performance, we saw some weak performance there from Japanese equity, but that'll be in a week again where we've seen a stronger pound versus yen, and that would just also speak to some of the translation that you see there on currency. But ultimately, Fidelity Index Japan down 2.2%. And remember, earlier in the year we were discussing that Japan had been struggling as well, dealing with that COVID crisis, and also the workforce beginning to feel the effects of inflation and sticky wages not going up as fast as price rises, and beginning to feel slightly poorer. And I would see both our Japanese positions across Fidelity and JP Morgan down more than 1.8% on the 1 week basis. But then switching over as well to the story looking at currency, we did see a stronger sterling versus pound, up about 1.47%, despite some weakness that we saw earlier in this week, where there were concerns of some trades towards dollar on concerns of global recessionary risks. But speaking of recessionary risks, moving on to quarter-to-date basis, 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 5v2 8.67% down to CBAM 1 3.87%. And then we did see, despite higher or escalated recessionary risk in terms of European equities, Allianz Bailey and Standard Life Aberdeen, European smaller companies, all up more than 15.5% on the back of the week. And that was also supported further by weaker GDP figures based on CPI coming out of the United States, and also European CPI lower than consensus or forecast, which was a net positive for European equity, as that maps a way forward in which both the Federal Reserve in America and the European Central Bank can sort of take a softer path of rate hikes going forward, and that would be typically taken as a risk-on sentiment for markets. We continue to see some headwinds there from Hypnosis Songs Fund, which was down 8.31% in light of this rising interest rate environment that we've been in, and also just some concerns really around how stable the sort of song buying, catalog buying rather, activity for the Hypnosis Songs Fund has been. But obviously seeing on Thursday going into a meeting where we'd see a vote of continuation based on that deep discount versus net asset value that we've seen for Hypnosis Songs Trust Fund, and also just seeing that what investor sentiment would be going forward for the traditionally or for the diversifying asset class going forward.